Hello and welcome to our economic briefing. Bank of Korea has just released its August economic outlook. And today we're joined by Bowman from the research department to discuss the key findings. Thank you for joining us.
Thanks for having me here. I'm pleased to walk you through our latest projections and highlight the reasoning behind our revisions. These forecasts reflect a comprehensive assessment of both domestic and global conditions.
Let's begin with the overall picture. The August outlook includes revisions to both growth and inflation, and I think viewers would benefit from understanding the big picture first. What are the main takeaways this time around?
Our outlook shows cautious improvements. We revised the 2025 growth forecast to 0.9%, up slightly from May's 0.8%, while the 2026 projection remains at 1.6%. Inflation forecast for 2025 has been nudged upward to 2%, reflecting weather-related food price pressures, with 2026 expected at 1.9%. So overall, the picture is one of a gradual recovery. Despite challenging external conditions and weakness in the construction sector, consumption is gaining momentum and exports are firmer than expected.
I see. One of the interesting points in the outlook is exports. Given the tough US tariff environment, many would have expected Korea's exports to show more weakness. Yet the report indicates that performance has been more resilient than anticipated. What explains this outcome?
In the second quarter, exports expanded strongly, led by semiconductors. Demand related to AI investment has been particularly robust, and many companies accelerated shipments ahead of potential tariff implementation. The negative effects of tariffs have appeared more slowly than anticipated. Firms have managed inventories carefully and absorbed part of the costs in their margins rather than immediately raising consumer prices. This adaptation has softened the short-term impact.
The report also emphasizes that tariffs don't just affect trade directly. They influence the economy through several channels. I think our viewers would find it useful if you could break this down more clearly. How exactly do these channels operate?
Yes, there are three main channels. So first, the trade channel. Tariffs raise import costs in the United States, which reduces real income and slows growth. That directly lowers demand for our exports. Second, the financial channel. When tariffs push up prices, the Federal Reserve may respond with tighter monetary policy. This raises borrowing costs worldwide, which in turn dampens consumption and investment in other countries. And third, the uncertainty channel. Ongoing trade disputes lead firms to delay investment, while households increase their precautionary saving. Together, these factors weigh on overall economic activity.
So with that framework in mind, the negotiation between the US and Korea in July stands out. They seem to offer both some concessions and new challenges. Could you walk us through the key outcomes and what they mean for Korea?
The July negotiation provided some clarity. Korea secured a 15% tariff rate on autos and preferential treatment for semiconductors and pharmaceuticals, which we welcome. However, tariffs on steel and aluminum were doubled to 50%, while reciprocal tariffs rose to 15%. As a result, the overall tariff burden remains broadly unchanged from our May baseline.
That's helpful context. But for people listening, the natural question is, what does this mean in practical terms? How much of a difference do these tariffs make to Korea's growth and inflation outlook when you put numbers on it?
We estimate that US tariffs will lower Korea's growth by about 0.45 percentage points in 2025 and 0.6 in 2026 compared with a no-tariff scenario. Roughly half of that drag comes through the trade channel, while financial and uncertainty channels each account for about a quarter. On the inflation front, tariffs raise import costs, but weaker demand from the economic slowdown tends to offset these pressures. As a result, we expect inflation to be about 0.15 percentage points lower in 2025 and a quarter percentage point lower in 2026.
You've outlined the external side clearly. Now let's shift to domestic demand. Consumption has been showing strength recently. What's behind the rebound?
Consumer spending has shown notable resilience. After contracting in the first quarter, it rebounded in the second, led by services such as dining out and entertainment. Consumer confidence has improved sharply, with the Consumer Sentiment Index rising from 88 in December to over 111 in August. This rebound has been reinforced by policy measures. The supplementary budget, including consumption vouchers, has provided additional support, and high-frequency data, such as credit card spending, confirm that this recovery is continuing into the third quarter.
However, not every part of the economy is improving. Construction investment has been weak for some time. Is this mainly cyclical, or do you see any structural problems?
It actually reflects both. Cyclical factors are tied to weaker business confidence and uncertainty. But structural issues are also serious. Unsold housing inventory is building up outside the Seoul metropolitan area, creating imbalances in supply and demand. Given these conditions, the recovery in construction is expected to be slow and uneven. That's why we have revised down our projection for construction investment.
Growth is only part of the story. Households also care about prices. Your forecast for inflation in 2025 is a bit higher than before. What's behind that adjustment?
The upward adjustment mainly reflects the impact of extreme weather this summer. Heavy rainfall and heat waves drove up the prices of agriculture and marine products. Beyond these weather effects, the underlying picture is relatively stable. Global oil prices have stayed steady, and demand-side pressures are modest. That's why we expect inflation to hover near the Bank of Korea's 2% target in 2025, before easing slightly to 1.9% in 2026. To sum up, temporary shocks are pushing prices up, but the overall trend remains stable.
You've given us a clear picture of the baseline. But of course, forecasts always depend on conditions. What risk could still upset this outlook?
Trade policy remains the largest source of uncertainty, which is why we prepared alternative scenarios in addition to the baseline. In the optimistic case, ongoing US negotiations with countries such as China, Canada, Mexico are resolved smoothly. If tariffs are rolled back, for example, through the removal of the fentanyl tariff, Korea's growth in 2026 could be about 0.1 percentage point higher than the baseline, while the impact on inflation would be limited. In the pessimistic case, negotiations break down and the US raises tariffs further, prompting retaliation from its trading partners. Under this scenario, Korea's growth could be 0.2 percentage points lower in 2026, while inflation could also be around 0.1 percentage point lower. These scenarios illustrate how changes in the external environment could alter Korea's growth and inflation trajectory.
So, in summary, Korea's economy is gradually recovering, but challenges remain in trade and the construction sector. This has been an insightful discussion, and I want to thank you for helping us better understand the Bank of Korea's latest projections.
Thank you. It was a pleasure to join this conversation. For further information, please refer to Bank of Korea's website.
And don't forget to like and subscribe to our YouTube channel.
Thank you.